with last week marking the precious metals' fastest ascent in the last 7 months for a weekly time frame. We note the high volatility in the gold market as tensions in the Middle East appear to continue rising, with the risk of a regional conflict may keep volatility elevated until the current conflict is resolved. In this report, we aim to shed light on the catalysts driving gold's price and assess its future outlook. Over the weekend, regional tensions appear to have been elevated in the Middle East as the soundness and stability of the region is called into question. This was evident during last week, with the precious metal had its best rally for the week in the past 7 months. Furthermore, the continued escalation of geopolitical tensions, which carry the risk of spilling into a regional confrontation, may maintain the high level of volatility in the commodities markets. The high levels of volatility could provide support to the commodities markets, in particular gold, which is considered to be a safe haven asset. Therefore, precious metals safe haven status seems to be funneling inflows as market participants may be concerned about the duration of this conflict. In addition, the potential risks associated should external actors enter the ongoing conflict could potentially add fuel to the precious metals ascent, as the potential widening of the conflict could have long-lasting geopolitical implications in the region. However, we would like to highlight that should the conflict be resolved, we may see the precious metal weakening as the markets return to normal. Yet that does not appear to be the case for now. In conclusion, the elevated risks of a regional conflict may provide support to the precious metal, yet should tensions subside, we may see the precious metal ceding ground. In our opinion, we anticipate heightened market volatility for the rest of the week, which may aid to gold's ascent. Financial releases stemming from the US have traditionally impacted the precious metal, given the greenbacks and gold's inverse relationship with one another. The divergence is the traditional relationship was seen last week, where the dollar appreciated against their counterparts, whilst the precious metal gained as well. Nonetheless, financial releases stemming from the US could still impact the precious metal as such, following last week's Fed consumer confidence figures, which showed expectations for current conditions to deteriorate while inflationary pressures remain high in the future, thus essentially implying that consumers are anticipating a stagflation scenario. As a result, traders may be interested in this week's Fed manufacturing index figure for October and existing home sales figure for September. In the event that the figures come in lower than expected, hinting at a deterioration in economic activity, we may see the precious capitalizing on weaker dollar. Whereas in the event that they come in higher than expected, we may see the precious metal ceding some control to a stronger dollar.